on.
Hi, I'm Brian Offenberger from Aftermarketer Club, and we're doing another one of our In the Pits expert interview series. And I'm doing it today with Allan Sanders. Allan's the principal of Weil, Akman, Baylin Coleman. They're certified public accountants, and they help firms just like yours with a variety of different financial issues. And one of the big ones we're going to talk today is about employee stock ownership options and employee buyouts of companies. So we call that an ESOP. And Allan, can you give us an idea what is an ESOP?
Sure. An ESOP is an employee stock ownership plan where typically the owner of a business sells his shares or a portion of his shares to the employees.
Why do they do that?
Well, they do it for a couple of reasons. One is certainly the tax advantages. By selling to your employees, you can get a very large tax deduction based on the financing methods. Also, for the shareholder, they're able to possibly defer their gain on their shares by selling it to their employees.
Okay. What kind of companies are good candidates for these kind of ESOPs, Allan?
Companies range from annual revenues of about $3 million upwards to publicly traded companies.
Okay.
For this particular industry and market, you can have a company with $3 million in sales, $2 million in sales, up to $50 million in revenue. You also need to have a good management team, good cash flow, yeah. Good
management team, good cash flow. You need to have a lot of your ducks in order before you kind of start, right?
Yes, and also minimal debt.
Okay.
Because ultimately you're borrowing the money, or the ESOP trust is borrowing the money, and the shareholder's getting it. And then the company is going to pay off this loan through contributions to the ESOP.
Okay. Now, what's involved? If I want to get started, how do I go about doing this?
The first would be to do what we call a feasibility study, where you sit down with management and you go through the business. You look at the financial statements, what's going on. You do a projected financial statement. You then determine whether or not there's going to be enough cash flow to meet the debt to pay everything off.
Okay.
You then want to make sure that your management team fully understands what they're about to get into. Because in this case, all the shares that the shareholder is selling is going to be divided up amongst all the employees.
Okay.
Okay? So you want to make sure that your management team is there. You want to make sure you have a good trustee. Okay? And then you want to just go through and walk through the process and making sure that the company can afford to do this type of transaction.
What are some of the demands that an owner that's going through this should be aware of? Are there any common pitfalls or mistakes that you see people are making?
There's plenty. The first is in the management team. You need to really have a very good, solid management team.
All right.
You need to have someone that you can rely on and that you trust, and you also need to have very good cash flow.
Okay.
Okay, those are really the two big things. After that, by doing a sale to the employees, the tax advantages here far outweigh selling your company to a third party that you don't know.
Far outweigh.
Far outweigh, yes. If structured properly, you can get basically the government to pick up a majority of the sale of the transaction.
Wow, so this is a big reason why you'd like to go this route versus some other sort of an outright sale.
Yes, this is the primary reason.
Okay. Now, how does your firm help companies? If I wanted to do something like this, how can you walk me through this process and how can you help me do this?
Sure. I'm a CPA.
Okay.
And I have an expertise in this area.
All right.
And depending on the size of the company or what the company needs to do, we act as the quarterback. We help do the feasibility study. We go help get the financing with the banks, the insurance companies, for the trustees. We also get and make sure that the valuation is done properly. If it's an audit client, we can't do the valuation. We'll bring it out to somebody else. Okay, and we make sure we put the whole transaction together.
Wow, take care of it all of it.
We take care of it all of it. Okay.
Great, outstanding.
So our first job is to take care of the shareholder and the owners.
All right.
And then after we complete that, and the loan is then repaid, then we move our concern, I should say, to the employees, making sure that they can now cash out as well.
Outstanding. And Allan, people want to get a hold of you. What's the best way to reach you?
You can get me at either Allan, ALLAN.Sanders at WABCCPAS.com, or else on my direct line at 443-921-1500.
Outstanding. We're going to make sure that we post this on our website as well, so if you and your firm need to get a hold of Allan to talk to them about an ESOP for your company, please do so. I'm Brian Offenberger. This is the In the Pits Expert Interview Series. We bring these to you very regularly, and we hope you stay tuned for the next one coming up soon.